Thanks everybody for joining Charlie and I again for our second installment of What's Trending in CTA, our managed future strategy here at Simplify. We are going to recap the prior month's performance, positioning, and some attribution. We'll also share some comments about what's transpired in the first couple days of August. If you missed it, we recorded our first version as of quarter end, June 30th. If you guys want to go back and watch that, it really recaps the whole first half of 2025. So without further ado, I'm going to share some slides and let's give you guys an update on what's going on in CTA. So as of July 31st, annualized since inception performance for CTA is just shy of 9%. As we think about how that relates to our official benchmark, which is the SocGen CTA index, we have delivered about 9.9% annualized excess return. So yes, that does mean that the benchmark has delivered a negative total return in the common since inception period for CTA. Key objective here, though, although attractive absolute performance is wonderful, helps the broader portfolio achieve its objectives, its core objective is really to provide diversification. And we've done just that since inception. CTA has had a negative correlation to the S&P 500, as well as a negative correlation to the Bloomberg Aggregate Bond Index, and a fairly low correlation to the Bloomberg Commodity Index. So CTA continues to deliver on its objectives. July was actually a very strong month coming out of what was a very weak quarter during the second quarter. We'll talk about the last couple trading days in July because there was a bit of volatility. But again, just restating the bigger picture here, thinking about how CTA, which is charted here against a 60-40 US-centric portfolio, CTA is in white, the 60-40 portfolio is in orange. The takeaway here is that as one ebbs, the other flows, and that's really showcasing or helping visualize that diversification benefit and having CTA as part of a broader 60-40 portfolio to help smooth overall volatility. So let's jump right into some performance. You'll see here on the left from Morningstar trailing 1 year and 3 year returns. I'll highlight as of July 31st, trailing 1 year, we continued to rank in the top percentile versus our other trend following peers. There's about 70 of them in the category. And then over a trailing 3 year period, just outside of that top decile, so long-term strong performance. And then on the right, I would highlight a really strong majority of the month of July, and you'll see here at the last couple days of the month, a bit of a sell-off related to some volatility in copper, as well as cattle. And so we'll chime in on that here in a moment. Just want to highlight before I pull Charlie in to share some comments. You'll see on the left here the month-to-date performance. So June 30th through July 31st, CTA delivered a 2.73% return. Year to date, that brought us to be about flat. Again, the prior recording, we talked about some of the challenges and turbulence in the first half of the year. So we started to see some steady gains come back into the portfolio. Cattle led much of that, but I will pause here. I want to give Charlie a chance to kind of speak from the futures advisor's perspective, a pulse on kind of positioning, and what were some of those key drivers that delivered that 2.7% return for the month of July. So Charlie, take it away.
Thanks, Paisley. Yeah, it was a pretty wild month with especially fireworks in copper. During the course of the month, the market re-rated the probability of copper tariffs in the United States of America, which would have implied a much higher price of COMEX copper. And so CME copper contracts were outperforming. And that was in the direction of the trend more generally and inured to the benefit of the managed futures sector as a whole. But all that was paid to toward the end of the month with a reversal by the administration on the copper tariff policy, which at some basic level kind of makes sense. The U.S. imports, just around 2 million tons of copper a year and makes substantially less than that domestically, and it's very hard to bring new copper supply online domestically. So it makes sense to not have an import tariff from a policy perspective. But that was terrible from the perspective of managed futures players because it was a massive counter trend reversal with the copper market selling off something like 20+% in a single day in COMEX copper, which is basically a completely unprecedented move. Broader perspective on that is with such a large counter trend reversal, putting pain onto the managed futures sector as a whole, we saw other heavily longed trend product also de-risk with a sympathetic sell-off in feeder cattle and live cattle, which also had extremely strong trend indicators and very good trend returns over the course of the year. But a pretty decent sympathetic sell-off, what we believe is catalyzed by basically P&L pain and position losses in copper, driving further de-risking. So yeah, it's pretty wild at the end of the month, and it's just this tale of more of the same, which is policy-induced volatility really driving the market. We've had a couple of really big events now since Liberation Day, the first and biggest of which was Liberation Day itself. Then you had the war in Iran kicking off and then unkicking off when the US escalated, while at the same time ended the conflict, at least locally in the market's eyes. And each of those were big counter trend moves and not great for trend followers. So yeah, so between that and the fireworks in copper, it's been a pretty wild ride for commodity trend followers, and it has mostly to do with really big sort of surprises to the market that are counter the trend and basically policy-induced volatility.
Yeah, maybe the other thing I might add here too is just high level for most of the month that long positions and feeder and live cattle were significant tailwinds. That was a key driver of both notional exposure as well as our contribution to volatility in the fund. So those were really strong tailwinds. And then as Charlie alluded to, is those last, couple trading days of July that we saw that sell off in copper, the contagion really off to the cattle market. That was a bit of a drag. So we gave up about half of the return in the last couple trading days of the month, but still eked out again almost
Yeah.
3% total return for the month, outperforming peers, which is great. And then too, just like to take a little snapshot of kind of the year-to-date period. Gold, which is in headlines again today as we're recording this on August 8th. But gold has continued to be a tailwind. Much of that was kind of centered in the first half of the year. So, from a year to date contribution perspective, gold has been a big tailwind. That's when you start to see then cattle come into play, which has been more prevalent in this current quarter. And then detractors, of course, thinking about rates broadly being a detractor year to date. There's been a lot of interest rate volatility, especially in the second quarter. So headwinds there. But really interesting time in trend following. I think there's been a lot of comments, recent articles, blog posts that have come out on some of those headwinds and how some of these turbulent periods in trend following historically have been followed by really strong periods of performance. So of course we're not making any extrapolation here, but I would say it's been an interesting time to be in trend following, I think, but we're pretty constructive on just some of those tailwinds that we started to
Yeah,
see
if I
in
could just build
July.
on that for a moment.
Please.
Past performance is not indicative of future results, so who knows what the future may hold? Only the good Lord knows. But there are many opinions in the market, and I happen to have one. So my personal opinion is that it's been a bit of a surprise so far this year to see the degree to which policy-driven reversals have impacted the market very, very quickly. And I suspect that we've kind of gone through a phase where the administration, which is desirous of fundamental change in the world, no value judgment there. They'll do what they do. Not for me to say. But it seems like they want a lot of change in the system, and they've been throwing stuff up on the wall, seeing what sticks, right? And so they've kind of explored the design space of how hard they can push on things, and in many cases gotten negative feedback from the market and other sources, like inside their political coalition, saying, hey, you can do this or you can't do that. Now that the legislative agenda is basically fulfilled with the Big Beautiful Bill Act passed, and they've sort of explored the space of how hard they can push on stuff, I suspect what we see now is a persistent push to implement the agenda now that they have what they want politically. And if that's the case, my personal opinion would be that I would not be surprised to see trends persist longer with less reversal because they kind of know what they can do now and they're going to just go ahead and do it. So that's sort of my view. Now, there are other things that drive the markets other than the administration. It's a big planet filled with lots of actors who all have opinions. as well as other sources of risk like the weather and so forth. And so anything can happen, but I do think the probability of extending trends is quite possible.
I think that sounds constructive then for trend following broadly. So I hope that
Excellent.
comes to fruition. Um, we want to keep these monthly updates short and sweet, just to give you guys some context. We have this deck that we are sharing on screen here that is available. If you guys would like, please reach out. We can send this your way. But I do think it's helpful, just as we talk about trend following and how dynamic and flexible of a strategy that it is, the importance of that in today's marketplace where we are seeing a lot of shifting kind of forces at play. Markets are rapidly evolving for better or for worse. And so just showing the dynamism of the positioning within CTA, going all the way back to since inception, and just thinking about current positioning here. Cattle continues to dominate portfolio from a long position. Interest rates continue to dominate from a short position. And you can kind of see how this positioning has evolved either year to date or over the past calendar years. So, with that, Charlie, anything else that you would like to highlight as of July month end?
Um, no, I think I've said my piece. Now we just need to find out what happens. But
Yes.
from our perspective, we just keep working at it and trying to make the product better over time.
Yeah. Well, that sounds great. Thanks for tuning in, Charlie. Thanks for joining us and providing some insight as well from the view of Altus. And we're here to help if you guys have any other questions.